Asking for a credit limit increase can feel awkward, confusing, and downright risky. It feels like if you make one wrong move, your credit score could take a major hit. But what if I told you that the real key to getting a higher credit limit is something most people never even think about? Well, today, I'm revealing 5 smart strategies for doubling your credit limit, including one that I'm nearly certain you've never heard of. So if you're looking to increase your credit limit, updating your personal and financial information is the first critical step. And surprisingly, most people overlook this. And I say it's surprising because the most important factor for a credit card issuer in determining whether or not they can increase your credit limit is your income. It's the primary metric that credit card issuers rely on when assessing how much credit to offer you. But the catch is, your income is usually provided by you, and a lot of people neglect to update it regularly. So just think about the pop-up notification you often get when you log into your credit card account. It might say something like, "We just need to confirm your income real quick." Most people ignore this prompt, but it's giving you a perfect opportunity for a credit limit increase without you even having to ask for one. Because just by updating your income, you could automatically qualify for a higher credit limit. And even if your credit card issuer doesn't approve an automatic increase, having your updated income on file sets you up for a more favorable outcome when you do request a credit limit increase manually in the future. And a crucial point that most people don't realize is that your income doesn't have to be limited to just what you personally earn. If you share household expenses with a partner, spouse, or anyone else, then you can often report household income rather than just your own individual income, because this gives a more comprehensive picture of your financial situation without turning the application into a joint one. And as you might expect, reporting household income can significantly impact the issuer's decision. But another key area to review is your housing cost, whether it's rent or mortgage payments, because most people mistakenly report the full amount that they pay for housing, even if they share that cost with other people. But if you're in a shared living situation and you only pay a portion of the rent, make sure that you only report that amount. So for example, if your share of the rent is $1,000, but the total is $3,000, then only report the $1,000, because this helps to present a more accurate picture of your financial standing. And also, if you don't pay rent for any reason, then it's perfectly fine to report $0. This won't raise any red flags. But the main takeaway here is to make sure that the credit card issuer has your most accurate and up-to-date information on file, because credit issuers have a set framework for offering credit based on your income and expenses. And so when your income increases or your expenses decrease, your credit limit can rise in tandem. So take a few minutes to log into your account, review your numbers, and update them accordingly, because this small action can have a big impact on how much credit is available to you. Now, after updating your personal and financial information, the next crucial step is to start using your credit card regularly. Of course, this strategy only works if you manage your spending responsibly, which means paying your balance in full and on time every month. But when I say active usage, I'm not suggesting that you carry a high balance on the card. Instead, I'm talking about making regular transactions, whether that's groceries, gas, subscriptions, eating out, whatever, and then paying off the balance either before the statement closes or as soon as it posts, because the goal is to show credit card issuers that you're actively using the credit available to you. Because if you only charge a small amount, like $50 a month on a card with a $2,000 limit, the issuer has no incentive to raise your limit because you're not providing them a compelling reason. But what does give issuers a reason to increase your credit limit is consistently using most of the available credit without maxing out your card and paying it off promptly, because this demonstrates 2 important things. First, that you're a valuable customer generating transaction fees for them, and second, that you're a responsible borrower who isn't accumulating debt. And this behavior is exactly what credit card issuers reward with higher credit limits. But you also want to consider the timing of your request, because to increase your chances of success, you want to start this pattern at least 3 months before you plan to request a limit increase. So during this period, you want to treat the card as your primary card, which means using it for as many purchases as possible. And then as the date of your request approaches, make sure that the balance on the card is kept below 10% of the credit limit, because your utilization ratio will be one of the first factors that credit issuers review when they consider your request. And a common mistake is waiting until the day you need a higher credit limit and then requesting an increase while carrying a high balance. This can create the impression that you're desperate for more credit rather than showing that you're managing your existing credit responsibly. Even if you regularly pay off the card, a high balance at the time of your request won't reflect well on you, regardless of whether the request is handled by an algorithm or manually by an underwriter. So, after using your credit responsibly for a few months, it's time to make your request for a credit limit increase. But timing is crucial here, and how you approach the request is just as important as the amount you ask for. Because when it comes to credit limits, you don't simply want an increase, you want a significant increase. And to get it, understanding the process and the strategy behind it is crucial. So the best time to request a credit limit increase is typically after you've had a card for 3 to 6 billing cycles. And let me make a critical distinction here. I'm talking about billing cycles, not calendar months, because billing cycles are what matter. Every billing cycle gives the credit card issuer a clear, trackable record of how you've used the card. And once you've demonstrated that you consistently use the card and have paid it off on time across several cycles, then the issuer will have enough data to make a decision. But there's another window to consider, and that's immediately after you're approved for a new card. Because if you feel that the credit limit is too low for your needs, especially if you plan to make a significant purchase soon, then you can call the issuer's reconsideration line and request a higher limit before you even start using the card. And while this doesn't always work, it can be effective in certain situations. For example, if you get approved for a $3,000 limit, but you were hoping for $10,000, then you can call and explain your situation and ask for a higher limit. In some cases, that simple phone call can result in a substantial increase right away. But if you're past the initial approval period and it's been a few months since you received the card, your best option is to submit the request online or through the credit card issuer's app. The reason for this is that most online requests are automatically reviewed, and they often result in a soft credit pull, which means that there's no impact on your credit score. On the other hand, if you call a representative, then some issuers may initiate a hard inquiry simply because the request was made through a different channel. So to avoid negatively affecting your credit score while you make your credit limit increase, it's safer to request online or through the mobile app. Now, before submitting your credit limit increase request, there is one crucial step that you need to take. You need to clean up your credit profile. And cleaning up means lowering your credit utilization, particularly on the card where you're requesting the increase, but also across your other accounts. And why is this so important? Well, 30% of your credit score is determined by your credit utilization ratio. And your credit utilization ratio is the percentage of your total available credit that you're currently using. So when this percentage is too high, it signals to lenders that you might be overextended, even if you've never missed a payment. And as a result, high utilization can negatively affect your creditworthiness. So before requesting a credit limit increase, it's important that you reduce your balances. And so you want to start by addressing the cards with the highest utilization, especially those above 30%, which is considered the danger zone. As I mentioned a minute ago, you want the utilization on that card to be below 10%. But if you want to be extra cautious, aim for 5% or lower. For example, if your current credit limit is $3,000, then your balance should be below $300 and preferably closer to $100 or even lower, because the utilization rate on that card will be one of the first factors reviewed when your request is processed. But in addition to reducing your utilization, this is a great opportunity to review your entire credit profile and ask a couple key questions. Are all your payments on time? And do you have any old balances that need attention? The cleaner your credit profile, the better your chances are, not just for your current increase, but also for any future credit applications. But even if you're not planning to request a credit limit increase immediately, lowering your utilization is still a smart strategy. It can give you an immediate boost to your credit score, sometimes increasing your score by dozens of points within just a few weeks. And this boost could make the difference between a borderline approval and a confident yes when you're applying for credit in the future. Now, at this point, you've taken all the necessary steps. Your income is up to date, you've been using your card responsibly, and your credit profile is in top shape. But now it's time to make the request. If you want to double your credit limit, this is where you need to aim high. And a common question a lot of people ask is, how much should I request? And while there's no definitive answer, a good rule of thumb is to ask for significantly more than you actually need. And a lot of people talk about the 3x rule here, which says that you can request up to 3 times your current credit limit and still have a strong chance of being approved. So if your current credit limit is $5,000, then you would ask for $15,000. But here's something important. Asking for even more than 3 times your limit can still result in approval, or at the very least, a very generous counteroffer. Because credit limit increase requests are not like salary negotiations. They're mostly algorithm driven. You submit a number and the system processes it. It either approves your request, offers a lower amount, or denies it outright. But if you ask for too little, then they won't offer you more. So it's important to aim high. For example, if you request a $20,000 credit limit and your issuer approves it, then that's great. But if they counter with $10,000, then that's still a win. But if you've currently got a $5,000 limit and you only ask for $6,000, then you've already set the upper limit before they even review your request. So now you know the 5 steps for doubling your credit limit without damaging your score, but there's actually something else that can take your credit game to a whole new level. Because if you want to earn 5 to 10 times more points than the people around you without spending a dime more, there's a strategy that a small group of people are using that almost everyone else completely overlooks. So to learn how to reliably earn way more points than anyone else you know, watch this video next.